Welcome everybody to another 144 and 360. This time we're going to go over the Fibonacci retracements and show you some of the things you have to watch out for when using these levels. Ideally, it's best if they hit the level and get the heck away from them, but in a perfect world, that would be it, and in this case, we're not. So you always got other things you got to watch out for. In this case here, 61.8 on the soybeans. We had one close above it, the next day right below it. Again, the reaction should be the same from a 61.8 level. In this case, it happens to come down and hit 38% of this move here. Next time up again, tried to close one time above 61.8, then right back below it, and then the break came again. You've got some areas here where it hits 61.8 down here. These are ideally the best situations where you get down below the actual level, then close above it, because then there's no other condition to watch for. If it just hits it perfectly like it did here, and then were to start a rally, you could always say, well, it could still go down below it and close back above it. In this case, that's what you want to see. Again, right here, 38 back of these moves, just a little trade above it, back below it, coming back into 61.8. Again, 38% went above it. That's ideally what you're looking for right here. Plunge down through it. And then here's a long-term thing. These were levels, and I'm going to show you in each of these grain markets, levels that we had as either our swing points for the week and or our long-term targets, and what to be looking for from them. In this case, this was a long-term retracement based on the continuation chart in the soybeans, and 38% had a big plunge below it, but again, closed back above it, and here you have a very nice rally already so far, 70 cents just off of that thing. So things to watch for: plunges below it, back above it, again up here, close above it, but back below it the next day. If it doesn't have that secondary close, that changes the whole thing, and it keeps you back into what was the original target. So now we'll go into the Discord here, because this is what hit on the all-time, or not the all-time, the continuation chart here, or not the continuation, the contract high, contract low. Here's your situation where it hit 61.8, our target down here, hit it exactly, and then took off from there. Nice and clean. That's plan A. That's exactly what you're looking for. No stress, no sweating it. Just hits there and gets out of there, and then produces a nice 50-cent move right after that. As far as what to look for after hitting a 61.8 level, just take a look at our other videos we have on what to look for, not only the 23% move and a 38, but a 61 and 78 point. Those are two videos we highly recommend you watch. Here we go into the oil. Same thing, 61.8. We had originally hit it one time, got a bit of a rally out of it, and then again plunged below it, but the close back up above it, and then here already a pretty decent move of $6 in the oil. Now the meal, we'll go into, again, a 61.8 level of contract high, contract low. Another nice clean one where it goes down. These were like the targets, and our subscribers understand what we're looking for, or we want them to, what to look for from 61.8 or 38 or 23, whatever it is. It's always important. We want everybody to understand what to be looking for. So even if this happens midweek, you know what the potential is from these moves. Is we want you to understand why we think what we think. And our last one here, we're going to go into July wheat. You can see here this whole move down once again here, all the way back up here to the contract high. Had a big close above it, next day right back below it, and just came off hard. Here's a perfect one, 38 back from here to here. That's, again, that's plan A. Came off hard. Then you get trades like this where you hit 78.6 based on a previous low, not the contract low, and then spike above it. That's all it can do is 38% back below it, keeping this whole trend negative. Watching our 38.2 video tells you that any move that stays below 61.8 obviously or 38.2 keeps the market negative and the trend intact, and this is what we're looking at. And then this was 61.8 to the contract high and low again here. Big plunge below it, but back above it. And from the bottom here, we've already had, 45, 65, 70-cent move from that alone. So these are just some of the things we want you to understand when you're dealing with these. Some of these are going to be perfect and just hit the levels and get out of there. Sometimes you're going to get a close above it or below it, and the next day right back below it, and to know that the ideal target is still the same. So hopefully you continue to watch these videos. If you like what we're doing here, please subscribe to our channel, give us a thumbs up, and more importantly, if you trade the grains, give us a look on our website and subscribe to our Grain Weekly Update, where we give all these levels, the targets, and everything else well ahead of time. So until then, thank you for watching.